Hi guys, and welcome back to Lorenzo 2 Cents podcast. So today we speak about Mercado Libre, the best time to buy. And this is a digest of Q4 earning release. So MELI is, in my opinion, one of the most misunderstood large caps in the market right now. It's growing revenue close to 40% year over year, and it's scaling logistics plus fintech in a way that no one else in Latin America can replicate. And yet it's priced like a business that is about to die. The price to free cash flow multiple is in single digit. So this mismatch is basically my thesis of today. I get why Mr. Market is nervous. So Latin America macro always feels like fragile, like FX, inflation, politics. Competition is real, especially in Brazil. And when Mercado Libre invests aggressively, margins look like worse in the short term. But here is the key. These worries don't explain the price. So if you price a company like there is no growth, you better have evidence for it. You better have evidence that the machine is breaking. So let's look at the machine. Brazil, go beast mode worked. So a few months ago, MELI turned aggressive in Brazil, more subsides, lower free shipping threshold, and better value proposition. So this is the type of move that scares Wall Street because it looks like profitability sacrifice. But it's not charity, it's a land grab. And it's working. Here is how management framed it. The acceleration is the result of our strategic investments to enhance the value proposition, most notably the decision to lower the free shipping threshold. More free shipping is driving higher purchase frequency and bringing new buyers into the ecosystem. So then the key line. This volume is translating directly into efficiency. Our logistics network absorbed the increase in volumes while driving productivity gains, proving our ability to scale effectively. This is the quote from the earnings call. So in numbers, that means GMV in Brazil plus 35% year over year at an all-time high, at least for the recent quarters. Sold item plus 45%. This number is nonsense. I mean, it's a lot, guys, for a company that already is that big. Logistics absorbed the volume while improving productivity. So this is important. They didn't just buy growth with dump spending, they scaled, right? When you scale logistic efficiently, you build a moat. It's not easy to replicate it, not even for companies like Amazon that have unlimited money to spend. Now, Argentina, same playbook, bigger check. Now they are doing something similar in Argentina. On March 11th, the CEO, Ariel, announced, I will not say the surname because it's impossible for me to pronounce it, Zdravzin, I didn't for surely said it correctly, announced a plan to invest 3.4 billion in Argentina in 2026. That is roughly a plus 30% versus the previous year. So where this money is going? Logistics network, like distribution centers, e-commerce platform plus technology, AI and everything it's needed to run the business. Fintech ecosystem, that is Mercado Pago. And they are hiring around 2,000 new people over there. So again, this is short-term pain for long-term dominance. This is the play. We have seen it over and over again. Think about it like if you want to build the Amazon plus PayPal, that is my thesis. So guys, go check my original deep dives that actually is composed by 2 parts, but it's really interesting because I did basically micro and macro analysis to prove my thesis. So it's something really particular which I recommend to go and read it. So if you want to build the Amazon plus PayPal of an entire continent, you don't optimize for quarterly margins. You optimize for being unavoidable. The profitability fear is overplayed, in my opinion. A lot of bear cases basically competition will force higher marketing spend and MELI will lose unit economics. This is the bear thesis mainly. But when you actually do the math, the opposite shows up. So if you approximate CAC, cost of customer acquisition, payback, as the marketing spend divided by incremental gross profit over a period, I did it over 2025 and 2024, it improved actually from 13.2 months required to recover the marketing investment in terms of gross profit in 2024 to 11.8 months. So actually they got better. Now they can acquire new customers cheaper than they did 1 year ago. So translation, MELI's customer acquisition machine became more efficient, not less, in an even tougher environment. So that's not what a company under structural pressure looks like. So there is no evidence that the bear thesis is playing out. This is what I want to say. So the proof that matters, free cash flow per share is compounding. And at the end of the day, I don't care about narratives that drive short-term repricing. I care about whether the business is turning into cash for shareholders. And if MELI investment were reckless, you would see it in the per share economics. Instead, what you see is a pretty clean story. Free cash flow per share keeps going up, and you can see it here. Look how much it went up in the last year, and it always been growing in the last 4 or 5, even more years from now. So this, even with a margin that is shrinking. So actually, this means that the investment they are doing in infrastructure and to acquire, to improve the customer experience are paying off. The best time to buy is when price goes down while value goes up. This is the takeaway from this article. And by the way, you can read this article on lorenzo2sense.com. So go there, you will find all the details that I'm telling you now briefly. So go there and subscribe for free to my Substack, and even subscribe to my channel, please, to help me, to support me. So best time to buy is when price goes down while value goes up. What does it mean? MELI is down 17% year to date, but the business is not deteriorating, it's strengthening. This is a classic pattern that we see over and over again on Wall Street. Management invests for long-term growth, margin compress a bit, Wall Street panics, stock sells off, long-term investors get a gift. So I love when this happens because it's one of the few moments where you can buy quality at a discount. So we are not trying to optimize short term. This is exactly the point, and it's exactly what the CFO said. It clearly stated it during the earnings call. So their focus is capturing commerce, fintech, and advertising opportunities. They will invest even if the pressures on short-term margin increase. They manage for the long term. This is the message that the CFO wanted to be clear on. So if you're an investor, that should not scare you. It should make you ask a better question. What do they become if this strategy works? Because no one else is probably pursuing it at this scale in the region. So what can they become? What they get in exchange of this short-term pain? And the big bet here, I have already extensively talked about the fintech part, but I think the next big bet is advertising, actually. So MELI sits on something extremely valuable, first-party data on real commerce behavior. So not likes or views, actual intent, because when people want to buy something, they go on MELI platform and clearly look for goods. And this history of searching and then buying is all available on to MELI, and this is a precious first-party data that they can use not only on their platform, but they can even sell this data. So if you believe in a world of agentic commerce, AI agents shopping for you, this becomes even more interesting because shopping moves faster from online to online, from offline to online. Discovery becomes an algorithm. Whoever owns the transaction graph owns the monetization. And by the way, this is somehow part of the thesis of Zeta that I wrote an article on recently. I will dig more in Zeta, but somehow these two companies are similar and are delivering similar values in terms of customer dynamic profiling data that they use to increase the marketing effectiveness of themselves in the case of MELI, but of other companies. This is the vision that even the management shared during the earnings call. So what MELI management aims to do, and they shared very clearly and transparently this, even though they are still early stage, is to sell this first-party data to other companies that want to better advertise. So like, just to mention one, Disney Plus or any other company that is actually part of MELI ecosystem, but even they will extend even beyond this. And I believe this business could even get, in terms of profit, bigger than the commerce. Because what I envision is that the commerce eventually will run at single-digit margins to win the market, while fintech and advertisement will print money. This is, I think, what MELI is going after, or if not, this is what they should be doing, right? Why? Because if they run this already efficient and scaled business at single digit margins, it means that competitor cannot get market share because they will deliver the best experience at the lowest price. On top of this, this is basically the customer acquisition engine. They can then cross-sell on these customers the fintech and advertisement products. And is here where they should make money. So they will not basically have any competition. That's the shape of the long-term MELI, I believe. So finally, the stock is priced like a problem. The business looks like a compounding machine. That's why I think the best time to buy is when the market is focused on short-term margin noise, while MELI is building long-term dominance. So guys, as always, this is not financial advice, so do your own research and due diligence. I'm long MELI, I own a position, and my current position, so the deep dive today that I normally always share, is minus 35%. So MELI was already heavily undervalued in my opinion when I opened the position. Now it's dramatically undervalued, and I think it deserves a place in everyone's portfolio because of the upside, and even because it may be not correlated to the US market that normally takes most of everyone's portfolio. So all in all, I think it's a good place, but again, do your own due diligence. That's everything for today. Subscribe to the channel and speak soon, guys. Ciao.